Jinesh Gopani then and chat about the fundamentals of the market. Jinesh, hi, morning. We were just cribbing about the fact that as to how we are completely disconnected from the way global markets are panning out, and 3 days of fall is what we've seen just when you had that touch and go moment with 11,100. Do you think this is exactly how we're going to be up until elections?
Yeah, I think so. We will have volatility continuing till election. The Nifty is in a very tight range. Unless and until it breakouts healthily, I think we are going to see this type of a movement where markets are up 1%, markets are down 1%. Having said that, even if you see the overall Q3 earnings have been okay. The large caps have delivered good numbers, but mid caps have been okay, and hence if you see the mid cap pain still continues. You are seeing the difference between the Nifty50 and mid cap index widening, which in a way is not a good sign, but given the challenges around slowing economy in the second half of this year, fiscal year, I think that is really hurting overall sentiments of the market, and hence if you see markets are in a very tight range waiting for some trigger. Probably that election would be a trigger to look for.
Do you think we should not talk about elections right now? Right now there are a lot of other worries. What will happen to NBFCs? What will happen to Diwan housing? What is the cross connection between ADA and other banks? Those are concerns, Jinesh, nobody knows about, and those are concerns which are really bothering the market, because elections are like still 3 months away. How does one deal with the interim challenges?
I think that NBFC challenges continues, and I think till March we have to be careful because liquidity is tight in the system, and we'll really have to see how NBFCs, especially tier 2, tier 3, tier 4 NBFCs sustain in this period. Hope we don't see any defaults coming by. At this juncture, at least we don't see that way, but things are pretty challenging for them, and we have to be very careful in asserting how these NBFCs will really thrive over next 6 to 12 months. So it's challenging for that. To be very frank, even there are corporate governance issues which are coming up every now and then, and that has a further impact on the overall sentiment of the market, especially on the mid and the small side. So I think all in all things are volatile, challenging, and issues around this will continue to keep us on the edge. Hope we pass this phase nicely till the election, and then after the election, hope second half of 2019 is calendar year is much better than the first half.
Jinesh, hi there, good morning. Wanted to get in a sense as to what the outlook is from the private banks. The general sense is that given all of the acute volatility, given the problems plaguing the NBFC sector, there's going to be a lot of gain of market share for some of these private sector retail banks. Is that the same school of thought that you have right now? And within the space, is there anything specific that you would advocate as a bet?
No, I think private sector banks are very well placed even without these issues around NBFC. Having said that, obviously some market share gain will come from these NBFCs who slow down in their business models, and obviously 10-15% of the good book or the good lending will definitely go to private sector banks. So we are bullish on private sector banks. If you see our portfolios, we are heavy on financials and more on the private sector bank side, and we really feel it's a 5-10 year story. You have an underpenetrated market share gain from PSU is the theme continuing for now last 15-20 years, that will continue further. Most of these private sector banks are strong in technological advancement, and that is where the critical game lies, how to service your customer in the best form going forward. And I think they are very well placed given their robust asset quality structure and disciplined ALM management.
Okay. Bata is up 3%, Sun Pharma is up 2%. Reliance is also chugging along very, very smartly. How do you see the market composition changing in terms of the pecking order? When I say that, let me be slightly more elaborative with my question. Up until now, quality stocks or high cash flow companies have traded at a strong premium. But after some poor corporate governance standard have been discovered by AZ or by Sun Pharma, do you think the market where in a market where only 10% of the stocks were going higher, now that will come down to 2 or 3% of the stock, and rest of the market will remain very, very flat with a downward bias? And when I say 2%, I mean I just talk about like 10-15 stocks in the Nifty, 10-15 stocks in the mid-cap stocks, that's about it.
See, I think when things are bad, when times are challenging, when you have an economy which is slowing down, then on a high growth trajectory, I think all these issues come up. Having said that, normally you would like a broad-based movement in the market on a longer period of time, because that is what will pan out in terms of growth, in terms of earnings growth. Once you have a GDP clocking back to 7.5–8% in a stable manner. So to that extent, I think near term, because of this fear psychosis, too many issues as you alluded, I think markets are very, very tight. Even if you see the FII and the domestic net buying figures on the cash side has been very, very abysmally low, given the market dynamics what we have. So I think at this juncture it is more of hiding into good names, decent names, rather than taking big bets on some of the stocks which you would have taken if market was on a full momentum. So I think it's frankly it's a challenging time. Next 2-3 months are very, very critical. We'll have to see how we cross this event of election, what is the real outcome and how much that will have its impact on the economy. So it's very unclear at this juncture how things will really pan out for let's say next 5 years once we get the election hurdle going away. So I think it is better to be cautious rather than going all out in the market.
Okay, but are you finding opportunities in beaten down spaces like autos just yet, or would you say they would continue to languish for some more time? At least that is what the feelers one is getting from Maruti, Eicher, across the board really.
See, I think demand is slow, no doubt about it, and even when we are doing our channel checks, we are not getting very good signs of demand picking up in a big way. So to that extent, I think maybe 1 or 2 quarters more. As of now, the sentiment is bit low. The confidence is slightly on a lower side, and hence I think people are might just deferring the purchases, or general overall economy slowness is being seen in auto sector in terms of the purchases. So I think it is better to wait for 1 or 2 quarters and then see how things really go.
Wanted to get in your thoughts as to how you read into the whole debacle, if you will, when it comes to the SL group of stocks, the likes of Z Entertainment and Dish TV. We have seen a bit of euphoria that may have petered off in today's trading session, but yesterday we had an interesting talk about the overall view when it comes to pledge shares. That's just viewed by the market very negatively, although it is a global practice that is followed, nothing really wrong with it. How are you looking at the story panning out now for Z Entertainment with the strategic stake sale on the anvil, etc.?
So I think from a business point of view, media as a sector is a good sector to be in, and the name which you said is one of the good names, and they have been in the market as one of the top players for last many years. But what I would refrain from answering is about this pledge shares or anything specific on the company due to compliance issues.
Won't really probe into that, but let's also get in a thought, Jinesh, as to what the outlook is, when it comes to the mid caps. We've seen that, the true sentiment perhaps of the market is being reflected there, where they're not really being able to play catch up to the large caps. Do you think that as of now, the lack of momentum is sort of going to continue when it comes to that large gap that we're seeing between the mid caps versus the benchmarks?
Yeah, so that's what I've been saying, that when economy is slightly growing on a slower trajectory and numbers are okay in that sense, if you really see mid-cap numbers have been okay as compared to large-cap numbers, I think people will wait, would like to wait for some signs of revival in the macro improvement, and that will come only when one have clarity on the politics and its impact on the economy. So I think next 2-3 months are really critical. We will be in tight range and hope we don't go down further.
So how, right now I can smell or I can feel that there is a tone of sadness in your voice. Right? When will that happy tone come back? 3 months, 6 months, 1 year? See, the lights have also gone down.
I think it is not about feeling sad or feeling happy. I will be more realistic given the current scenario, the challenges we are facing, the event which is on annual. I think it is always better to be cautiously optimistic rather than becoming very optimistic at this note, because we really don't know how this election mandate will come, what will be its outcome, and what will be its real outcome on the economy. If let's say there is a steady government, then I think things will chug along well and people will be back on an animal spirit, and we'll see momentum back in second half. But let's say if there is a change in government, then which government is being formed, how's the cabinet being formed, what are their agenda on the reform process, that always creates a lot of uncertainty in the near term, and markets don't like uncertainties. Market likes stability and consistency. So it is not about being sad, it is about being realistic.
Of course, being realistic is the point that you're driving home. Thanks very much then, Jinesh, for giving us your take, your mood as well as your outlook overall on the markets and mid caps.